So I almost fell out of my chair yesterday after the market closed. I was looking over the day's moves and literally right in front of me, I saw it. The perfect signature in price, staring right back at me. Yes, I trade the breaker model, and I'll touch on that here in a bit. And yes, it went without me for 70 handles. Now, to give you some perspective on that, with one futures contract on the NASDAQ, that is $1,400. Now, when I show you the magic of this model, the precision of it, you'll be sold as much as I am. And here's the cool part. This mistake that I made, this mistrade, is actually a lesson in disguise. I'm going to show you how to make these slip-ups, whether you're trading this model or not, work for you. By the end of this video, you're going to be on your way to trading smarter. Seriously, just watch. You'll see how to turn oops moments, those missed opportunities, into aha moments that define the success of a trader. So get ready to take some notes and let's head into the charts. Let me start by showing you my model, the breaker. Here we have a bearish breaker. We have a high, a low, a higher high, which purges a form of liquidity on the buy side. Then it moves lower below the low that made the higher high, typically the low that made the higher high, but not in all cases. This is why we need to review post price action. But it breaks this low. This is also called a market structure shift. It comes lower, then it comes back up to mitigate any losses any smart money traders may have, and then it moves lower. The inverse is just the same. We make a low, a high, a lower low. That lower low purges a level of liquidity on the sell side. It could purge it on this one. It could purge it on this one. It could be that low, could be here. It could be here. It really doesn't matter. We have a level of liquidity being purged. Then what it does is you see price with an aggressive candle move above the low that made the lower low. Now again, this high may not always be the one that made the lower low. This is again why we review post price action to see how it's showing up in price. We make this low, then we break higher, making a market structure shift. Then we see price come back down to this level for any smart money traders that need to mitigate any losses that actually went short. So you would have people going short here. They went higher, it goes lower back to the original start where smart money traders may have gone short. They are able to get out here or get long positions here, and then price moves higher. So let me show you what it looks like in the charts from yesterday. Now we are looking in this pink box right here. This was price action from April 3rd. This is the NASDAQ. It's what I trade, and we are on the 1 hour chart right now. 1 hour chart comes up, it hits this level right here, and then it moves lower. Now on the 1 hour, it looks like nothing. It looks like it's literally just coming and rebalancing these bearish fair value gaps or these SIBIs, and then it's going to move lower, which it does. If we were to play this out here, it ends up moving lower just like this. However, if we go into the 15-minute, this is where I'm telling you guys, when I show you this, it's just so beautiful. Let's see if you can identify that breaker pattern in this price action right here. All right, take a look. Do you see it? I mean, you should. I already have it marked out. Is this right here? Look at the precision. Here is the breaker. All right, we have a high, a low, we have a higher high that hits this level right here. Okay. Now this is a 15-minute fair value gap. It doesn't purge this high, but it purges the higher high, and it comes up into an imbalance. So when we go and look at this right here, this buy side liquidity or sell side liquidity could also be a fair value gap. Let's show you here. There could be a fair value gap like this that price moves into. It doesn't necessarily always have to be a buy side liquidity. It could be liquidity with a fair value gap, so it fills an imbalance. Look at the precision of this high, low, higher high. We break lower, and we don't come back up to this level until the next day. Now, honestly, I missed this move completely, and this is why I'm making this video. The price action started out going down, and then we just were extremely bullish. We hit this level, and I missed it. I did not look left far enough, and I missed this price action right here. Look how accurate it was on the 15-minute. We hit it 2 times on the 15-minute. But take a look on how it looks on the 1-minute. Boom, we hit it to the tick. We come down. First opportunity for my mechanical strategy that I do for 10 handles. Boom, number 2 opportunity where it goes for 10 handles. Boom, hits it to the money. This is beautiful precision. This is the signatures in price that I need to recognize even more, because when it does this, this is telling me this bad boy is about to move. And look how far down it goes. I mean, I told you that's 70 handles. From this high to this low is over 70 handles. That is a beautiful move, but it gave 3 opportunities for a mechanical 10-point strategy right here. And it's a simple 1R trade. You get in at the breaker, you put your stop loss at 10 handles, and you target 10 handles. So you would have gotten 10 handles right there. You would have gotten 10 handles right there. And you would have gotten another 10 handles right there. If you were to do one mini contract, that would have been $600, and I would have been done for the day. And I completely missed this opportunity. This is my model. And if you want to be able to learn from your mistakes, or you go through post-price action and you see stuff like this, you have to have a model. This is my model. And here is how I learned from my missed mistakes. I go through my post-price action. I identify my missed opportunities or the mistakes that I made within the opportunities that presented them in the market. I then mark up the chart. So in this case, I would have marked up, I would have put the high, I would mark high, low, higher high, and then I would have marked this as my break in market structure. It's very significant. And then we see price come back up into it. I would take a screenshot of this and put it in my trading journal. Add any notes that are necessary to describe what I'm looking at on the 15-minute chart. And then I would add another screenshot of the 5-minute. I would want to describe what I'm seeing on the 5-minute. And then I would add a 1-minute so I can describe what I'm seeing on the 1-minute. Because as you can tell, the way it plays out on the 1-minute and the way it looks on the 15-minute are completely different. And you need to be able to recognize the difference between the 15, the 5, and the 1-minute and be able to put all those together. Now, when it comes to my trading journal, I do not just put it on a Word doc. I actually use Discord. Let me show you. Here's my Discord right here, and you will see 2024 Market Maker Model setups. I start journaling all my Market Maker models or my breakers in here. I write them down, I talk about, and I look at what I'm doing, what I missed, how I can improve, the trades that I took, opportunities that I missed, and I journal them here. How you decide to journal is completely up to you, but it is essential. By reviewing the market every day, looking at your model, writing it down, and learning from them, you'll get better at trading. It's like being a huge fan of a certain type of car, like a Tesla. At first, you watch a ton of videos and you learn all about them, and then soon after, you start seeing them literally everywhere. After a while, you get so good at spotting Teslas that you can tell they're coming even when they're really far away. This happens because you've spent so much time looking at their unique characteristics. It's the same with trading. If you really dive into learning about your trading strategy and journaling the different ways they show up in the charts, you'll start seeing good trading opportunities coming before they're obvious to everyone else, because you can recognize their characteristics before the move happens. This right here is what profitable traders do and do well. And you now have the tools to do it well as well. Thanks for watching, guys. We'll see you in the next video. Take care.